Good afternoon, Ken Jolliffe with BIS Commodities in Cedar Rapids, recapping the week of May 19th in the commodity trade. Very interesting week in the grains. When you take a look at them, corn market, July corn down 6.5 cents on the week, D's corn down 7 cents on the week. The wheat market, looking at the July contract, down about 22.5 cents, D's contract down 17.5 cents. The soy market, complete opposite this week. July beans up 51.25 cents. Nova beans up 45 cents. The bean trade this week, all of a sudden saw the bulls move back into it again. Tail end of last week, we seemed like we wanted to trade between $14.50, $15 in the July contract. I think by doing that sideways trade caused some of the managed funds to step aside late last week. This week, once we pushed into the higher levels, the technical trade, these boys that got out last week came back through the door, both guns shooting out the barrel, moving the bean market up, the highs we've seen here this week. Quite interesting when you take a look at the November contract. If we had not had the slight sell-off here on Friday, you could have had the largest one-week move for the life of the November 14 contract. At 8:30 this morning, we were up 51.25 cents on the week. If we would have held that, as I say, that would have been the largest one-week move for the life of that particular contract. The storyline continues to be pretty much the same stuff here for right now. It's the tight old crop supply. It's the strong cash basis, particularly in the eastern belt areas. The rumor mill continues to roll through about South American beans working this way. Each day that we were above this $15 value, you heard about another one or two boats that supposedly were nominated and sold into the U.S. market, to help alleviate this tight problem. The other thing that kind of got a twist going here this week, when you look at towards the new crop, since it did somewhat stay penny for penny with the old, the Chinese are back in buying some new crop beans from the United States. Their crush margins improved this week. Higher meal values over there allowed them to start locking in some of the cash beans here for Octave D's type shipment out of the U.S. The other thing that may have got into the meal market a little bit this week, there were stories that it was possible of a Panamex being canceled with meal coming out of Argentina. Now, when you did look down there, a lot of times their politics plays into the grain trade side of things. You did see the currency down there weaken some this week. Typically, when you see that currency weaken in Argentina, it seems like the farmers down there will become really tight-fisted on letting anything growth-wise, corn or beans, be sold into the market. So that may have played into this thing just a touch here this week, on the meal side of things. Plus, they are still struggling somewhat to get their final harvest done. Both their corn harvest and bean harvest is lagging some. About 25% left to go down there. So, with the money flow, with a little bit of that, and this technical trade, we just saw this thing explode higher here this week in the bean complex. It'd be really interesting to see what we do as we come back here after the Memorial Day break. Corn-wise, pretty much a dog. We've taken about 45 cents out of the market since back on the supply and demand report day. We're down here in these lower levels. We're playing with the 200-day moving average in the July corn. News-wise is pretty lax here right now. Exports this week weren't too bad at 20 million bushels, but it just seems like that maybe it was the weak link of the buy beans, sell corn, buy beans, sell wheat type trade here. Very little balance could be mustered out of it. Even the close here today, seemed like we started to see some pickup in hedge pressure, towards the end, whether it was because of the 3-day weekend or we're coming to the end of the month here next week, but there still seems to be a pretty good lid on top of this corn market here for right now. Planting pace in the corn, we should be somewhere probably 85% or greater done. When we see the report here next Tuesday afternoon, The lag areas continue to be, central and western Minnesota, North Dakota, parts of Wisconsin, and parts of Michigan. But, each day that's gone by this week, those areas have gotten smaller. And with the weather forecast we have here right now, it seems like they should have a pretty good weekend of pushing along, trying to get those acres done up there. As far as the rest of the Corn Belt, other than some isolated rain across the central part of Iowa, for instance, I would say that we probably got the majority of the corn is planted. We're probably pushing maybe 80% done on the beans. The areas that could be lagging is the far northeast corner of the state because of the cool and wet start that they've had to this spring. But as I say, very little news in the corn market here, right now. Wheat market, being down as hard as it was, besides maybe being a weak link of the spread trade, we are seeing some pickup in moisture in the far southwest parts of the plains, even though that is probably doubtful that it's going to help the quality of the wheat or the amount of wheat down in those areas. Is more kind of a psychological thing. Now, we did see a export trade here, today, where Russia sold Indonesia some wheat. So, even being off, 85 cents from the high in Chicago wheat, $1 something off the high in the Kansas City wheat, with the European wheat market, and the Russian wheat market, we're still not competitive in the export trade. So, we could see some additional selling in the wheat as we move forward. Livestock market this week, you look at the hog market and it continues to struggle. You hear the talk of the reduced runs, which is very true, but the weights continue to run higher than normal. You look at the futures market this week, and it's just kind of a choppy, sideways type trade. The pressure we saw on the market here to close out the week took the June hogs back down near the support level of 1590. So, it appears that the amount of hogs right now are adequate for what type of demand we've got. We'll have to continue to see if this hole ever shows up that we can, we look about from the disease. Cattle market weaker today. Interesting to see when we talk about the cattle, in particular the feeders. They seem to be the ones that are very similar to the beans. They want to play the bull side of things. Ran up and posted new highs here earlier this week, only to close about $3.50 off those highs. The interesting thing about it is we had 2 consecutive days of the feeder cattle market being down. Now, will that play into a rollover of that particular sector of the trade as we begin next week? Will yet to be played out, but something to be kind of watchful for as we move forward. So that's pretty much a wrap-up of the commodity trade here for the week of May 19th. Have yourself a safe Memorial Day weekend. Remember, the trade will not open up again until 7 o'clock on Monday night. So catch you later.